Let's talk I bonds, my newest risk-free investment, and it's something that you can do with any amount of money, which is one of the great things about it. And where I want to start off everything is you can do it with as little as $1 if you want. So this is not something that's exclusive to only rich people. No, it is open to everybody. So what I want to do in this video is share with you how I bonds work, and then also show you the website and how you would go about signing up for an account and then also purchasing the I bonds that you would want. But right off the get-go, when I say bonds, I am specifically talking about I bonds, not E bonds. E bonds are the ones that you would think of that like old people are doing, right? That are paying you bare minimum, basically nothing. So I am not talking about E bonds. I am talking about I bonds. Very, very important. And I'll continue to go through that as we go. But we are investing in I bonds. So why are I bonds powerful? Why did I make the investment? Well, first off, they are risk-free. They're backed by the U.S. government. Now, I understand, well, Clay, what if happens if the government goes under and they can't pay you back? At that point, who cares? At that point, the best investment is going to be guns and ammunition, okay? So like I said, technically speaking, okay, they're not risk-free. But if this whole thing comes into play where you're not getting paid back, like I said, grab a gun, grab some ammo, because that's what's going to actually matter most at that point. But assuming that does not happen, then yeah, you're going to get paid back. So it's a risk-free investment. And then next, and here's a great part, is they adjust with inflation. So as of right now, as a recording of this video, and depending, hopefully people are still watching this video years from now, so you'll have to check on your own. But at the time of this video, in our economic, environment, inflation is very high. So these bonds are paying over 7% right now. So a guaranteed 7%, I like that quite a bit. But that's always going to be keeping up with inflation. So if inflation goes even more, well, then the value of these bonds is going to go even more. Next part is they pay interest for up to 30 years. So there's something that will give you good solid income for up to 30 years. And then the other part is there is zero state and local tax. There is federal tax still that you would have to pay on the gains, but as far as state and local tax, there would be nothing in that regard. Now I want to share with you some, I don't want to say downsides, but just some considerations that you would need to make. And I would argue, yeah, that this first one is a downside. You are limited to only $10,000 per year. Now, if you do a tax return, you can put in an extra $5,000. But it's not like you can sit here and be like, I want to put in $10 million and get 7% on $10 million. Doesn't work like that. They do limit it, at 10,000. But still, hey, every little bit counts. Next part is you cannot sell in the first 12 months. So this would be an investment where you can look at that cash and say, yeah, I know for sure I'm not going to need it within the next 12 months. And you know what? But I don't want to just leave it in my checking account or savings account and just have it get eaten away by inflation. No, I want to at least be able to fight against inflation as much as possible with the 7%. Again, you can say, well, Clay, if that's the case, why don't you just put it in the stock market? Which is true. You're not wrong, but there is a much higher degree of risk in the stock market because if you put your money in the stock, right, or a mutual fund or an ETF, that ETF could go down. And you could definitely not only lose your principal, but now all of a sudden you're not maintaining that amount. So if you know that you want to maintain a certain amount of cash, but you also know that you don't want to use that cash within 12 months, then an I bond could be a great choice for you. And then the other bit is if you do sell between 2 to 5 years, you are going to forfeit 3 months of interest. So it's not like the end of the world. But after that first year, you are able to go and get the cash if you would ever need it. There's just going to be, like I said, the forfeiture of 3 months of interest. But after that, there is no penalty after 5 years. So for sure, if guaranteed, I'm not going to need this cash for the next 5 years, then you're going to have zero penalty at all. But again, after that first year, it's not like the penalties are mind-blowing, or it's not like you're getting, hit in the face with a sledgehammer, like you would be if you're, withdrawing early from an IRA or a 401k or something like that. In this situation, it's just simply 3 months of interest. So if you're still watching, I'm assuming that you're interested. Maybe you're not quite there yet, and that's fine. But I do want to now walk you through additional resources and then the process of actually signing up and purchasing an I bond here. But all this takes place, and it must take place. So you can't go and do this through your Charles Schwab or Fidelity or E-Trade account. You got to go through the government website, which right here is treasurydirect.gov. So that'll be the website that you want to use. Again, treasurydirect.gov. treasurydirect.gov, and that'll take you to, now obviously this website is going to be changing over the years, but as of the recording, this is what it looks like. So the first thing, just if you want additional research, you would come to individuals, click right there, and then right here you would click on the research center, and then over here you would want to click on products in depth, and then down here you would want to click on the I savings bonds, and then right here it's sharing everything with you. It's telling you minimum purchase. It's talking about all sorts of various things depending on your situation. So like I said, if you want more information, then that's how you can go and get more additional researches. I mean, you can give them as gifts. There's a lot of flexibility. So don't think that what I showed you to start off the video, are the only considerations and, only powerful things about an I bond. There are additional things, but I don't also, I don't want to make this a 30-minute video when you could just quickly come through here and read whatever you need and, for your specific situation. But like I said, right there, love it. Federal income tax, yes, okay, fine. State and local income tax, no, but that is how you would go about learning more about these things if you wanted to get more information with it. And then right up here, the interest rate on the new Series I bond is 7.12%. Pretty crazy, huh? 7.12%. I'll take it. So if you want to get signed up, and this is, I don't want to say what's complicated, and I get it. It was funny. I had one member of my community say, Clay, is that the right website? I'm not getting hacked, am I? And I know that the government's lagging behind a little bit here in the fanciness of their websites. But yes, as long as you're at treasurydirect.gov, you're fine. But like I said, when I first said it, I don't want to say I struggled, but it wasn't totally transparent. But now that I look, I guess maybe I made it more difficult on myself. But we are once again at the homepage here. So you're going to just come over here and click on open an account. So that'll be step one. Next step here is you're going to want to come down here and click on this right here. Once again, assuming you want to do the I bonds. If you're looking to do other things, well then yeah, maybe that's going to vary. But I'm operating under the assumption that you want to do I bonds. So we'd go down here and click on Treasury Direct right there, or more specifically, you could just click right there on that go button. Now this is nice because after you click on the go, it'll bring you here and it'll just tell you the steps, and it'll also tell you the information that'll be needed. So you're going to need your tax ID number, you're going to need some sort of email address, and then you're going to need a bank account number, right? Because in order to purchase this, they'll go into your bank account and then use that money to purchase the bond with. And then of course, like anything, you need to choose a password and all that sort of good stuff. So after you get there and go through things, you'll just come down here. And then down here at the bottom of the page, you'll just click apply now. So very straightforward. Just make sure you have all your information that you're going to need. But hopefully you know kind of your social security number off the top of your head. But right there, go down and click apply now. Now this is where things you can get fancy. I don't know, maybe talk with your, if you have a CPA, or, talk with your tax, provider, because maybe there's a better way to go about this. But I'm just operating under the assumption and showing you the way that I did it. And, I went and I just did to individual, which will be the automatic default. But like I said, you have a bunch of other situations, and I'm not, a financial advisor. All I'm sharing with you is how, this is what I decided to do. But like I said, if you want to talk with your tax attorney or what have you, then maybe there's a better way to go about all this. But I'm just operating under the assumption you're just an individual and you want to get some of these. So you would click individual, and then you would move on to the next step. In order to do that, down at the bottom of the page, you would just click on submit. And then you're going to go through, fill in all this sort of stuff. So nothing fancy. I think we've all filled out something at this point in our lives online. Come down there, make sure to click the box. You don't want to do anything fancy. You don't want to end up going to jail. So, just click the box, make sure you are who you say you are. And then once again, click submit. Now, I've already done this, so I can't fill it out and do it together. But after that, then it's just basic stuff, right? It's going to be set up a password, give me your email, all that sort of stuff. So nothing fancy. So at this point, you get through all that. You set up your account. You get your email. They'll email you a password. They'll email you, an account number. And then once you have all that, you get logged into your account. So let's go there next. So after you get logged into your account, this is what you're going to see. Now, I've already made purchases once before the new year started, because you can do it. For me, I just figured it out, luckily in the nick of time, so I was able to make the purchases for 2021, and then I made them for 2022. But you can see right here that, just the overall primary holdings, and right there under the savings bonds, I did the $10,000. So this is just your organizational thing. But for you, you're going to wonder, okay, well, how do I buy? Well, right up here, you're going to click on buy direct. So that'll be the first step in deciding. And remember, at this point in time, you're also going to have everything linked to your bank account because that'll be part of the final sign up process. So it's not like all that will already be done, but you're going to want to now go up there and click buy direct. So after you click on that, you're going to come down here and click on that one, Series I. All right. Remember, Series EE, that's the boring one. That's barely paying anything, but we want Series I. I cannot reiterate that enough. So you would go down there and you would select that. And then after you selected that, you would come down here and click on submit. And then when you are here, pretty self-explanatory, but enter in the purchase amount right there. Select your source of funds. And then you would go down there and, like I said, select for a single purchase. If you want repeat purchases, so if you want, you could set up, maybe every week you want, I don't know, $50 taken out of your paycheck, $20 taken out, but you can totally set up all that. There are several different choices for, the frequency of your purchases. You could just do a single purchase. Like I said, I'm going to assume that you understand how that actually works, but I do want you to know that at least you do have flexibility in terms of when you purchase, how often, and how much. And then when you get all that figured out, you just come down there and click submit, and it's as straightforward as that. So that wraps up the I bonds, and that's how you do it. That's how they work. Those are the benefits, some considerations, and I was super excited when I just stumbled across these, going through headlines and saw, just somebody advertising 7% risk-free. I thought, all right, is this some sort of gimmick? But no, it's not. It's all legitimate. I'm assuming that you don't think the government is going to go under. But if you truly do think that the government is going to go under and not be able to pay things like this, then you should definitely not be buying I bonds. You should be buying guns and ammunition right now. But for me, I do own guns and ammunition. I now own I bonds. I believe in diversification. I own real estate. I own stocks, and I own a little bit of crypto, but like I said, I'm a big believer in diversification. And I bonds is another way for me to be able to diversify. So if you're somebody that wants to just have diversification amongst your wealth building and all of that, then like I said, I wanted to share this with you. But hopefully you learned something. And whether or not you decide to make the move, hey, at least now you're informed. So if you have any other questions or anything like that, feel free to ask those down below. Although, like I said, that research center there would probably be your best place to go about it. But also, I'm curious in the comment section. Let me know. Are you going to get I bonds? Or did you make the purchase? I'm very curious to know how many people, watch this video and then decided to diversify some of their wealth into this, as I think it makes a lot of sense given obviously it just with inflation, which as of now is just absolutely crazy. So get out there, consider I bonds. Thanks for watching. And like I said, let me know down in the comment section if you decide to make the investment. First off, thanks so much for watching the entire video. Real quick, before you go, I want to invite you to a live webinar, web class, training, workshop, online event, whatever you want to call it, but it will be me live revealing to you what I've discovered that has allowed me to transform myself from being an employee to being my own boss, including how I had only one losing day out of 73 days in total. I'm going to cover 3 keys that have helped me unlock profitable consistency within the markets. The first key is super weird, but in a productive type of way. The second key is super awesome because it quite literally is wired into our DNA as humans, making it very easy to use. But in a cruel way, this becomes a pitfall for many traders. I'll explain it all though, including how to avoid the pitfall that it creates for some. And yeah, the third key, when you hear it, sounds way too good to be true, but it's not, and I'll show you how it all works. Then at the end, I open it up for a question and answer session that is, again, totally live. Even if you can't make the live session, please still sign up as it will be recorded, and you can go back and watch the replay that I will send you. Click the image on the screen or click the link down in the description box so you can get the date and time and claim your spot, which I should note is limited due to the fact that this truly is a live event. If you have any questions, let me know. If not, I'll be seeing you soon.